guys, it's Doc's Market Minute for Monday, June 29th, the end of the month. And as we talked about last week, we've finally got movement. And even though I felt that the Greece situation was all priced in already, I guess what was not priced in was the nuclear option that the Greek Prime Minister took, basically saying, all right, we quit. I'm going to throw this as a referendum back to my citizens, but it's going to take about 6 days before we're going to have an answer to you. And that's the one thing more than anything else that Wall Street hates is uncertainty. Wall Street hates uncertainty. It rather would have the bad news as long as it knows what the bad news so that it can price it into the chart. But not knowing what's going to happen for a week is what drives this market crazy. And so as a result of that, we're seeing markets down about 25 handles right now in the cash market, although we had gone as low as about 41 points lower yesterday when the futures opened up around 6 o'clock Eastern. So now what we're squarely looking at is that head and shoulders pattern that I brought up last week, or I've been bringing up actually now for a few weeks, which is, you know, again, this is always interpretation to determine where the neckline is around these, but it's probably somewhere around 2070 right now. Now, what could happen today is that we finish moving down to that 2070 level, and then we might see the chart bounce from here, maybe a little dead cat bounce, for a couple of days. Remember, markets are going to be fairly quiet the rest of this week because of the fact that many people are going on vacation. So we may see more volatility than normal, as a large institution can literally swing the market on its own in some cases, especially if we're getting near the end of the week like Thursday afternoon. Now, there's no trading on Friday, but you can bet that people are not going to be wanting to be in a position of risk over a long weekend because there's no way to hedge that. So we might see some additional weakness as we get into the end of the week. And so we may see a bounce here, but if this head and shoulders is going to work out, we're going to see it immediately go down through this line here. And then this is where the white line comes into play, that this sets up the downside projection. Again, as I talked to my newsletter this weekend, there's no law that says that the market has to follow this. But I think if we take this extrapolation, we're looking at a target of about 2,000 for the first leg down, which is really not that big of a deal. I think we calculated this as about a 6.3% haircut off of the market. Again, when you look at this on the monthly chart, this is where you start to understand the perspective of here. Where the price comes down to here, I would think you would say that that's really no big deal. That's hardly even a setback whatsoever. But in terms of looking at the market off of its highs by 130 points, you say, wow, that's a huge move. Well, it's not. When we're at these nosebleed levels up here, this is where we're going to start to see increased volatility of that, because there's people with a lot to lose. Now, the analogy I always use with something like this is we've got a very heavy weight that's being skillfully balanced right now at the top of a very tall, long, skinny pole. And as long as you keep that weight exactly balanced and exactly perpendicular to the surface of the earth, right, it's going to stay up there. But if you start to introduce a little bit of lean, a little bit of wiggle, or anything like that, this can all come flying back down in a hurry. And I'm not suggesting that we're going to see this come all the way back down to 1400. But ultimately, what we might see is the beginning of something which could, again, you have to look at this as a larger perspective. This could be a larger head and shoulders pattern down here, which could target something around that 1600 level. And the 1600 level is important because this could be just, if we pull this out, I think what you would see is that around the 1600 level would be a retest of the recent breakout. So while this would be considered a cyclical bear market if it came all the way down to here, in the context of a secular bull, this is basically just a pullback in terms of a secular bull if this thing is able to take off from here. So that would be a major reset button that the market could hit by hitting that target. And I think that would increase our opportunities of seeing the market go up well past 2,000 over the next few years if we were able to absorb this bear and walk away from it. So again, obviously I'm extrapolating forward like way beyond what's happening today, but this could be kind of that crack in the iceberg that really starts things to really increase the volatility from here. And being range bound and being extremely range bound over the last 6 months, this has been very difficult to trade because of the fact that, not just because it's been range bound, but because we've had very, very low implied volatility to go along with this, which really means that we're not being paid for the risk of selling options out of the money. And here's the chart of the VIX showing the fear index, or the implied volatility in essence of the S&P 500. And this is what happened when we got down to this point here, which was just about a week ago. We mentioned this and said, this is a warning that we are getting to be extraordinarily complacent again. We now had a close below the lower Bollinger Band on the VIX at that time. And that is always something to be concerned about when you have that level of complacency in the market. So now here we are. We have this big scary event today, well, actually this week, that we have to absorb, and yet the VIX is still only up to 17. It's still only, it's a moderate teenager level right now. We're still not up to those levels of 20, 25, and 30, which really represent something serious that we have to account for. So there's plenty of room yet for this market to get much more scared than it is. And if that occurs, then that's where the opportunities lie in today's market. So that's it for today's report. A lot more to talk about this week as we keep an eye on what's going on here. Thanks for listening, and we'll see you tomorrow.